Hello, my name is Dan Bishop and I will be presenting a financial analysis of Barclays plc and comparing it to Banco Santander. Barclays is a universal bank incorporating retail and commercial banking, corporate and investment banking, and wealth management and insurance. It boasts 48 million customers worldwide. Santander is also a prominent universal bank with a similar presence in Europe when ranking assets. Barclays showed a strong performance during the financial crisis with strong CFROI above the cost of capital. It invested well in assets the year prior, mainly due to the acquisition of the remnants of Lehman Brothers at a significant discount to book value. Barclays also had a solid run of CFROI from 2020. However, overall, Santander has shown stronger CFROI over the 18-year period, with the last 9 years showing consistent and impressive returns, always above the cost of capital. Both banks have had a similar asset growth, with high investment in the build-up to 2008 and then stabilized around 0%, with Barclays being slightly more volatile. For Santander, the recent increase in CFROI and asset growth are reflected by the stock price increasing from 2021 upwards by 41%. Barclays has had a slow decline in stock price since 2013. Santander and Barclays could attribute their increased CFROI in the last 4 years to an increase in total revenue growth, operating margin, and asset turnover. Over the whole period, Barclays has had very stable asset turnover and somewhat stable operating margins with negative revenue growth. This can explain the lackluster CFROI up until 2020. Moving on to valuation measures, both Barclays and Santander have a lower price-to-earnings ratio compared to the industry average, with Santander's ratio even lower, indicating that investors are paying less for each unit of earnings. Santander also has more than double the earnings per share. The return on equity and assets for Santander is higher than Barclays and much closer to the industry average, suggesting it is more efficient in using its assets and shareholder funds to generate earnings. Both firms have a price-to-book ratio of less than 1, meaning they are both potentially undervalued as they're trading below their company's book value, with Barclays seeming more undervalued in comparison. The dividend yields are very close, but both are relatively behind the average. Barclays' dividend payments have been increasing in the last 4 years, surpassing previous peaks, and the projected yield has higher growth than Santander. Over the 10-year period, both dividend payments and yields have increased. Santander's payments have lessened and yields have recovered to approximately where they were pre-COVID. Both companies have reported increased upcoming dividend payments. Santander's higher loan-to-deposit ratio may indicate that it's utilizing a larger portion of its deposits for lending, potentially resulting in more debt. However, its lower debt-to-equity ratio suggests that it's still less leveraged than Barclays and has less debt relative to its equity. Barclays, with its lower loan-to-deposit ratio but higher debt-to-equity ratio, indicates that while it may have less reliance on deposits for lending, it has a higher level of debt relative to its equity, which could pose higher financial risk compared to Santander. Santander having a higher level of bad loans compared to Barclays signifies greater financial risk and potential losses for Santander, which could weaken its financial health. While both banks are increasing their debt, Santander is also increasing its equity, while Barclays has stayed stagnant. This means that Barclays' debt-to-equity ratio will be increasing at a greater rate, expanding its leverage. Barclays has recently focused on, quote, reviving its flagging share price by returning more money to shareholders and shaking up its operating divisions. It's also innovating by selling equity in its UK merchant payments business to private equity firms that possess more industry knowledge to increase efficiency. Santander has pledged to increase shareholder returns to €5.5 billion. Most analysts agree to invest in both banks. For Barclays, 18 out of 28 analysts recommend buying, and for Santander, 12 out of 18. I recommend Barclays as a short-term buy, as it has high potential but with a risk of substantially declining. It has shown recent improvements in its operating margins, asset turnovers, revenue growth, and CFROI, and possesses a low price-to-book ratio. I recommend Santander as a long-term buy, as they have shown stable, positive CFROI for a longer period and have seen higher growth in the same measures. I believe investors have seen this potential as reflected in the increase in stock price since 2021.